I'm in New York City at the Waldorf Astoria Hotel for REITWeek 2011, NAREIT's Investor Forum. Joining me is Carolee Burroughs, Principal with West End Avenue Advisors. So Carolee, I understand that you've done some research on volatility and correlation between REITs and other asset classes. What have you found?
We've found two things which I think are important. First, there is a time-varying nature to the volatility and the correlations between REITs and the stock market. The second thing is that REITs are not the only asset class where these higher correlations with the stock market have persisted over the past 2 years. It's fairly well documented, I'm sure that you know, that market correlations increase during crises, and we saw that after Lehman's collapse. And it's reasonable to assume that these higher correlations will persist after the bounce off the bottom of a market low, and then revert back to their norm. However, we did not see that occur with REITs. Over the past 2 years, the correlation with REITs and the stock market have remained high. We did notice, though, that this time period also coincides with QE1 and QE2. So we suspected that the Fed's easy money policy, may have played a role in these persistently higher correlations. So we decided to look at the correlations of asset classes that investors view as inflation hedges, which would be stocks, REITs, and commodities. So we found the same pattern with commodities that we've seen in the REITs, and actually the results for commodities have been even more dramatic. So given this environment, and given that we're in a period where the correlations with REITs and stocks are relatively high, it really doesn't seem any more unusual, say, than when the correlation with REITs and the stock market were negative during the tech bubble. I think the long-run correlations are what they are, and we'll probably see that play out, over the next property cycle. I think what's important for asset allocators to understand is that this time-varying nature of the correlations between REITs and stocks is actually a risk factor. And like any risk factor, it will be more pronounced, during certain periods of time. And it's during those times where the portfolio manager of an asset allocation strategy is going to need to manage that risk. And
from what you're hearing from the folks that you're dealing with, what are their perceptions and attitudes towards investing in REITs now, and how has that changed, given the crisis that we all went through?
I think there's another important characteristic of REITs that it is starting to become a little more well known. REITs fall into the category of what people refer to now as stuff stocks. Stocks of companies that own stuff, and REITs hold a fair amount of tangible assets. And if we get into a high inflationary environment, something similar to the 70s, I think you're going to find stocks that have a large amount of tangible assets on the balance sheet, and specifically tangible assets, not cash, because cash will lose its purchasing power. But those stocks that have tangible assets, I think will get more attention from investors, over the next 10 years if we do end up in that type of environment. And again, you will see the correlation between REITs and the stock market start to drop.
Carolee, thank you very much for joining us.
Thank you for having me.
For more from REITweek 2011, be sure to visit REIT.com.